Guys, it's Wednesday, December 10th, 5:23 a.m. Central Time. Grain markets are mixed to lower this morning. March corn futures down a quarter cent at 447 3/4. January soybeans down 4 at 1083 1/4. March Chicago wheat down 2 1/4 at 532 1/4. March Kansas City wheat down 3/4 of a cent at 526 1/4. March spring wheat down 1 1/4 at 575. We've got some more nonsense to report as it relates to China soybeans and the White House. Why don't we start there?
On Tuesday, U.S. Trade Representative Jamieson Greer stated that the deadline for China to purchase the agreed 12 million metric tons of U.S. soybeans is not the end of December, but rather the end of the growing season. It's unclear what Greer meant when referring to the growing season. The White House originally released a fact sheet that stated China would purchase 12 million metric tons of U.S. beans by the end of 2025. However, according to Greer, there was a discrepancy between the White House's published deadline and the actual deadline for completing the purchases. So far, during the current marketing year, China has purchased only 3 million metric tons of U.S. beans.
When you read through this CNBC article, it borders on comedy. It's pretty bad, and it makes the administration look pretty bad. Jamieson Greer says it's the end of the growing season. Which growing season? We don't know. Is he talking about Brazil? Does he know when the Brazilian growing season is? I doubt it. CNBC went and interviewed Joe Glauber, who was a former USDA chief economist, and asked him what he thought about this. He said he doesn't know what the administration means when it refers to the growing season. He said it's not a term that USDA means by any chance. Does that mean at harvest, or does that mean actually at the end of the marketing year, which is the more common way? Scott Bessent, of course, told us last week that it was now the end of February was the deadline. Jamieson Greer says it's the end of the growing season, but doesn't specify a time frame. So I don't know that anybody has any clue. And then to add fuel to the fire, let's listen to Carolyn Levitt talk yesterday.
Another huge win for our farmers following his successful meeting with President Xi in South Korea, where President Trump convinced President Xi to continue purchasing or begin purchasing again American soybeans, which is something China wasn't doing under the last administration because they had no respect for our President Biden or for the country at the time. But now they know President Trump is not messing around. He's going to stand up for American farmers and American families. And so those purchases have begun from China, and American soybeans are being exported from the United States as we speak because of President Trump. He promised the farmers he would be there for them. He is delivering on that promise.
Okay, so Greer and Bessent are confused at best and straight up lying at the very worst. Carolyn Levitt is just straight up lying. Last year, China bought 22.5 million metric tons of soybeans from the United States. And this year, the estimated marketing year-to-date total is 3 million. So the question is this: are they really that clueless, or are they just gaslighting and just outright lying to us at this point? And people get mad when I criticize the administration because a lot of us voted for Trump, right?
Mm-hmm.
And I kind of see it this way, like, maybe this is a bad analogy, but if my kids lie to me about like some silly little stuff, do I get mad at them and reprimand them, or is it like, hey, we'll let it slide because I love you and support you? No, like, you should hold the administration to account, whether you support them or not. I lost a lot of business when I called Scott Bessent an asshole last week, but you know what? If the shoe fits, wear it. And if you're that soft that you can't handle like some actual truth about what the administration is telling us, then see you later, buddy. I don't know. What are you going to do? Let's go to the USDA report.
Tuesday's USDA report was largely uneventful. The USDA kept its 25-26 soybean export forecast unchanged at 1.64 billion bushels, a 13-year low and 13% below last year. Soybean ending stocks were also unchanged from the November estimate at 290 million bushels. Through early November, soybean exports were running about 40% below last year, suggesting that further cuts to the export forecast may be warranted. On the corn side, the USDA raised corn exports to a record 3.2 billion bushels. Ending stocks were lowered to 2.03 billion bushels, down from last month and also lower than what traders anticipated.
Yeah, I feel as if USDA is probably too high with its soybean export forecast, which they left unchanged. I mean, we are, as we've discussed, we are already through our prime soybean shipping window in the United States. Could we see some like big contra-seasonal bump to jump up and hit USDA's forecast? I guess it's possible, but probably unlikely. USDA did increase its estimate for current marketing year corn exports, which have been fantastic. And they have every reason in the world to do that. The question mark on the corn balance sheet, as I see it, on the demand side at least, would be feed and residual. USDA is calling for this 10 or 11% increase year over year, and I just don't know if that's possible. USDA did not update the size of the 2025 U.S. crop. We'll see the final crop production estimates, and put final in quotes, in January. Let's go to John Deere.
Following President Trump's statement on Monday regarding the reduction of tractor prices, John Deere said on Tuesday that it is helping farmers substantially cut costs. According to Trump, excessive environmental requirements have driven machinery prices too high. Deere, however, emphasized that its newest models incorporate advanced automation designed to lower labor costs and chemical costs. Like many other input costs, as we talked about yesterday, equipment prices surged after the pandemic due to massive inflation. Machinery costs have also risen as a result of technological advancements and import tariffs on steel and aluminum, which have increased manufacturing costs.
Deere released a statement here earlier this week. John Deere shares the administration's focus on reducing costs for our nation's agricultural producers and consumers. We are doing all we can to help U.S. farmers reduce input costs. The equipment and technologies Deere makes here in the U.S. are giving American farmers new tools and technologies that can substantially reduce their input costs and labor costs while increasing yields and boosting their margins. To be fair to Deere, John Deere is a great American company, of course. They have dealt with, as a company, as every business has, they've dealt with inflation. One of the big things that people don't discuss as much with inflation is the cost of labor. But the cost to just get to people to come to work is drastically increased than it was, pre-COVID, especially any sort of skilled labor. And then you've got every sort of input that Deere has to buy, of course, has gone up. John Deere has acted fairly well as a company. Percentage return since the start of 2021, Deere's up 60%. I believe they're trailing the S&P 500, probably not doing as well as the broader stock market, but still doing just fine. And when you compare that to corn and soybean prices, and maybe that's not a fair comparison, but corn and soybean prices both down 20% in that same time frame. So, John Deere is not corn or soybeans. John Deere is not reproducing itself in multiple hemispheres every year. It's a different situation, but Deere's doing just fine. I don't know what they're actually going to do to reduce your input costs, but they say they are.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about yesterday's premium videos?
Nobody knows exactly what the Farmer Bridge Assistance Program will entail as far as rates by commodity, but Paul Neiffer has as good of an idea as anybody. And if I had to guess, the estimates per crop that Paul gave us in yesterday's premium video are going to be damn close when it's all said and done, because Paul's a sharp dude and he knows his stuff. I did a USDA snapshot yesterday after the report. These are like quick 2 or 3 minute videos where I just say, hey, this is what USDA said. This is what it means for the markets. It's like a quick, watch it quick. Now you know what the report said. Now you can go about your day type thing. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. If you want to see that video with Paul, if you want to see the USDA stuff, we've got Charts with Brian Split coming out today. You can sign up at Standard Grain, $50 per month, cancel at any time. No other fee, no other obligation. Nobody tried to sell you anything else. Sign up this morning. I'll forward you a copy of this morning's email, which includes all of those recent videos.
The USDA lowered its 2026 fat cattle price forecast yesterday. Live cattle prices are projected to average $235 per hundredweight next year, down 4.5% from the November estimate, but still 5% above the agency's 2025 projected price. USDA cited reduced packing capacity as the primary driver of the downward revision. As we can all remember, in late November, Tyson Foods announced the closure of one of its largest packing plants in Lexington, Nebraska, and also announced that it will be eliminating the second shift at its Amarillo facility, leaving the plant with just one shift. The USDA also raised its 2026 forecast for beef imports to a record 5.45 million pounds. That was driven largely by the recent removal of certain tariffs on key suppliers, specifically Brazil.
I personally never pay a ton of attention to like the USDA price forecast as it relates to grains, at least. Cattle, is that how we should handle it also? Or do you think this is something we should hang our hats on?
It's something that should be paid attention to, definitely, but I don't know if I agree with these projections. We're going to see even tighter fat cattle supplies into next year as producers continue to retain heifers, Mother Nature willing. So I think we could actually see prices go higher when it all comes down to the volatility in the market. And if we can get certainty back in the market after we've experienced such uncertainty due to what the administration has done in the past month.
This is a monthly live cattle chart, and I would maintain that big picture, very big picture, the bull trend remains intact. And we've actually got a pretty good month going this month so far. Now, you break out below that, call it like 195 on a continuation basis. It's going to start to look worse, but I think it's okay for right now.
Argentina is cutting grain export taxes. The new measure is set to take effect in the coming days, is permanent, unlike earlier reductions this year, which were temporary. Export taxes on soybeans will decrease to 24% from 26%, while taxes on soybean byproducts will fall to 22.5% from 24.5%. Corn taxes will be reduced to 8.5%, down from 9.5%, and wheat taxes will drop to 7.5% from 9.5%. According to Argentina's economic minister, the move represents another step toward phasing out export tariffs, a key promise that President Javier Milei campaigned on.
This is another thing that you could perhaps criticize the Trump administration for. So Trump administration provided Argentina with this $40 billion swap line, which is it's not the U.S. just giving Argentina $40 billion. It's a currency exchange. We're supposed to get the money back. I don't know exactly what the status of that is. But in any case, we kind of, some people would argue, and I don't know if this is my argument, but some people would argue that through that currency exchange, we influenced the election and kept Milei in office, and that now this is the result, and Argentina is going to be more competitive with us on the export market. I don't know. I mean, Argentina is the world's biggest soybean processor. They crush more beans than anybody. They export more meal and more oil than anybody. So it might shake things up a little bit. And I don't think the soybean market really likes this very much.
Silver prices surged to a record high yesterday, with spot silver gaining roughly 4% to climb to $60.50 per ounce, driven by expectations that the Fed will cut interest rates by 0.25 percentage point today. Silver prices have also found support after the precious metal was recently added to the U.S. critical minerals list, which has raised concerns about potential future tariffs amid tightening global inventories. The outlook for silver remains bullish as it stands to benefit from a weakening U.S. dollar, monetary easing, and continued safe haven demand amid ongoing geopolitical tensions. So far this year, silver prices have climbed nearly 110%, outperforming both gold and platinum.
The chart is absolutely phenomenal, up 209% year to date, 2025. Is that right? Maybe it's 109%. I may have a typo there, but up 253% from the 2022 low. Absolutely phenomenal performance. This is what I would call part of the debasement trade. What is the debasement trade? The debasement trade is that our government has no idea how to handle the currency. The stewardship of our currency has been extremely, extremely poor under every administration since we bailed out the banks in 2008. It's been an absolute disaster. We just print money. We do easy money policies, and investors are taking out protection. Basically, they're seeking to insulate themselves from the constant and rampant inflation that has happened and will continue to happen. So they buy silver, they buy gold, they buy Bitcoin, they buy stocks, they buy farmland, they buy a lot of things to protect themselves from the debasement and the poor stewardship of the currency. Silver's up 164% since the start of 2024. Bitcoin's up 109%. Gold's up 106%. The S&P is up 46%. These are trades that, have their own fundamentals, but at the same time, it's all the same trade. It's protect me from the government money printer. And that's what a lot of this is.
The release of commitments of traders' reports will be accelerated. The CFTC had initially planned to have the data current by late January. Following delays caused by the government shutdown, the agency now expects to bring the data up to date by the end of December by releasing reports at an accelerated pace.
Golf clap for the CFTC for maybe they'll have it together here in 3 weeks. Whatever. What did cattle do yesterday?
Cattle futures were mixed. Live cattle were 50 cents lower to 37 cents higher. Feeders saw losses ranging from 15 cents down to 57 cents. Box beef prices were mostly unchanged yesterday. Choice was up 14 cents at 361.04, while Select was down 57 cents at 348.03.
Outside market's pretty quiet. The S&P's off just fractionally. Same thing with the Dow and the NASDAQ and the Russell. Treasuries are mixed. Crude oil's up 36 cents and the January WTI 58.61. Have a great day, guys. We'll be back Thursday.